Hello and welcome again. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Thank you for joining us for our market insights and observations. Today is August 25th of 2022, and this morning we had breaking news, an update on the second quarter GDP report. We got a final read. The actual number was 0.6% negative. We were actually expecting a negative 0.8%, so it was slightly better than expected. The bottom line here is that the GDP on the second quarter for the U.S. economy basically shrunk, okay? And the first quarter was a negative 1.6% print on the first quarter GDP. So if you add them together consecutively, that's two consecutive quarters of the U.S. economy shrinking. And that is, by technical definition, a recession. So we are in a recession, whether the headlines talk about it or not. Speaking of the headlines, we were bright and early talking to Barron's and Bloomberg, Insider.com, and a few other news outlets. And I was quoted in a few of those as well. So we're going to put the links down below if you want the full articles. I'm going to read just right in just a second what I actually was quoted in saying, because I think it's really relevant. Not only are we on the front end of making news here at Blanke Schein Wealth Management, but it's important that if you're not subscribing to Barron's or not subscribing to Bloomberg, even if you click on the link below, it's going to take you to a paywall. So let me tell you what our conversation was all about. Essentially, it's the GDP, but more importantly, tomorrow with the Federal Reserve. Tomorrow, the Fed concludes their 2-day meeting in Jackson Hole. It's their annual meeting, and ultimately, we don't particularly anticipate too much drama or headlines or breaking news or even, deviation from the course of their hawkish tone. Markets are taking that in stride. In fact, from the last Friday to Monday, markets traded down in anticipation and preparation for tomorrow's updated announcement from Fed chairman. Now, in the meantime, Tuesday through today, markets are sort of muted. They're sort of staying in balance, not much volume here and there, and not much price movement or conviction one way or another. Again, waiting for tomorrow, and tomorrow's a big number, or it's a big message. But today's number, we're squarely in the headlines. Here's the Barron's going through it, and the quote was, Thursday's GDP figures confirms that the economy has been slowing and may have entered into recession, although the economic weakness has already been priced in. And that was my quote in Barron's earlier this morning, bright and early. And then also Bloomberg, I'm quoted right after Mohamed Al-Arian, who was formerly with PIMCO, but now he's with Allianz. I'm a big fan of a chief economist, Mohamed Al-Arian. Right underneath his quote, he basically said, "The Fed should not blink." And he addressed this talking about Powell and in his speech tomorrow, basically saying, hey, Mohamed Al-Arian's quote is, stay steadfast, stay firm, and continue with the hawkish talk, because if they pivot, that could wreak havoc on markets, because we need them to stay ahead of inflation because they've been behind the curve. Right underneath that, this is my quote, while we expect a hawkish tone from the Federal Reserve Chairman Jerome Powell at Jackson Hole's commentary, the symposium historically in that forum where no surprises are common, and we're confident that Powell's commentary will be void of any major market surprises. We expect Powell to continue to emphasize that the Federal Reserve's decision are data dependent and also should factor into the PCE inflationary reading tomorrow morning. And we'll see how that comes out. But the reality is that if you look year over year, inflation's up 8.5%. So what I really am talking about is the CPIU. That's what's most relevant. What you spend money on in your kitchen table economics, if you will. What we spend money on in the Schein household, right? It's a lot of education and healthcare. And those, not just this year, because inflation's up 8.5% year over year, but just about every year, there's double-digit rates of inflation into those two sectors of the economy. It's inevitable. It's going to happen. So we have to plan for it. And that's what we plan on your side as well. Let's call it healthcare. We plan for that in the financial plan. And so on a one-on-one basis, you've heard me use the CPIU, and it's always well above even the Fed's target of 2%. Years ago, we've had clients many decades, and we always had a 4% inflation rate embedded in our financial planning software that we've done for our clients. And clients would be like, oh, that's a little bit more than expected. I said, not necessarily, because in the Fed's number, They use every sector of the economy, including TVs, electronics. Electronics are a depreciating asset. They're going down year over year, month over month, day over day. But the government read, if you actually look at what the government looks at, they say, hey, the new TV that you're going to go out and buy, that is as if you're going to consume it every single month over month. That's not an accurate reading, right? You don't buy a TV every single day. So they use that to their advantage when the government calculates the CPI, and that comes down. So the bottom line is we look at the GDP. It's the consumption of goods and services in the U.S. economy. It's about just under $20 trillion, 19 trillion and change, and it's shrinking. It's not growing, okay? And that's 2 consecutive quarters that we saw. But at the end of the day, we plan for the economies that are going through cycles. We look for opportunities even through that. In fact, that's some of the best times where we can perform even better for our clients as it relates to sifting through opportunities for our clients and really set their portfolios up for long into the future, staying ahead of inflation and maintaining that lifestyle and that income that's so vitally important. So that's our update for today. Again, the links are below to the Barron's article today that I was in and quoted in, to the Bloomberg and a few others, several other media outlets. We were up bright and early, but we always are, so nothing's new. So we made some news today. Enjoy, take a look, take a read. If it's behind a paywall, just reach out to us. We'll figure out a way to get it to you one way or another. But thanks for watching. We'll see you again next time.